Hi, I am Anna. I come from www.ntvforex.com. US Fed redefines goals analysis http ntvforex.com news ID 429765 8/28 2021 24:49 p.m. Focus US monetary policy, Eurozone inflation NBSP US Fed redefines goals at the annual symposium in Jackson Hole yesterday. Federal Reserve Chairman Powell delivered his announced speech on the results of the Monetary Policy Review. The discussion process on the review began in early 2019 and has now been completed. In it, the Fed explains how it interprets its dual mandate of price stability and maximum employment. This is an update that, according to those involved, had become necessary due to the changed economic environment. For years now, the economy's growth potential has been declining, and with it the estimates for the equilibrium interest rate. Furthermore, it became apparent that, until the outbreak of the latest crisis, inflation rates had remained very moderate and below the central bank's target of 2%, despite the lowest unemployment rate in 50 years. It is therefore foreseeable that interest rates will more often be at the lower bound and that the room for maneuver here will therefore remain limited. All this has led to the following changes. The Fed will define maximum employment more broadly and more inclusively. Powell emphasized the importance of a strong labor market, especially for low and middle income earners. In the future, the shortfall from maximum employment will be assessed. Up to now it had been deviations from maximum employment. While the wording does not indicate any major changes, the considerations behind it are significant. As long as inflation shows no signs of accelerating, the central bank will not react in the future when the labor market approaches the presumed maximum employment level, but will allow it to overshoot it. There will also be changes made to the second objective of the dual mandate, price stability. Although the inflation target of 2% will remain in place, a period of moderate overshooting will be permitted in the future after phases of undershooting, although there is no quantification. According to Powell, it could thus be seen as a flexible form of an averaged inflation target. The new definition of the Fed's mandate does not immediately bring any change in monetary policy. The changes announced yesterday will only have a concrete effect once the recovery of the U.S. economy is well advanced. The new framework will then provide a decision-making structure. However, this does not mean an abrupt break with the reality of recent years. This is because the Fed and other central banks has long been aware that macroeconomic contexts have changed over the past years, and this has already been taken into account in decision-making in the past. Now, however, the reaction to the new environment and thus a longer wait before raising interest rates has been laid down. We do not anticipate that the Fed's decisions will have an immediate and lasting impact on the market's outlook. The initial market reaction was not homogeneous. In the bond market, yields on medium and longer maturities have risen slightly, while the dollar weakened somewhat against the euro. The U.S. stock market gained moderately. NBSP inflation expected to decline in August. A first flash estimate for Eurozone inflation in August is to be published next week, September 1. The substantial downward pressure on inflation from energy prices will continue in August. Core inflation was subject to extreme distortions at the country level in July, leading to significant increases in France and Italy. In our view, this was triggered by the considerable cyclical fluctuations triggered by the coronavirus crisis. In contrast, core inflation in Spain collapsed to a level of 0.2% YY in July. For the Eurozone, this led to a short-term rise in core inflation to 1.2% YY. We expect core inflation data to return to normal in the coming months. Due mainly to the expected normalization of core inflation, we expect Eurozone inflation to decline in August. Another factor of uncertainty is Germany, because the German government has temporarily lowered VAT rates until the end of 2020. This already led to an inflation rate of 0% in Germany in July. Download the full week ahead. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.